Seems to be a little bit of contention around this meeting. In general and in theory, production cuts would boost prices. Why are Nigeria and Angola, why are they opposed to some of these proposals?
So I think that the main issue here is that those production targets were set for 2024 were set in June 2023, but those were preliminary. There was going to be a revision of those production cuts, and apparently Angola, particularly Angola, does not agree with the proposed quota. They're thinking that they can produce a bit more than what the external sources suggest for 2024.
So back in September, when OPEC announced it would extend cuts, we saw oil come back up to $80 a barrel. So right now we see it above that leading into the meeting. Oil certainly had a bit of a rally since then. What kind of cuts in your mind are needed to get prices either back above 80 or keep them up above $80 a barrel? I'm talking Brent crude right now. Brent crude trading at $84 a barrel. What kind of cuts are needed to keep oil prices above $80 a barrel?
So I think you really need to extend the 1 million barrels per day, at least in the first half of 2024. We think that if there's no extension of at least the 1 million barrels per day from the Saudi voluntary cuts, prices would drop below $80 per barrel in the first half of the year. If OPEC wants to put the oil prices up to, let's say, between $85 and $90 per barrel Brent, then a cut of 1.5 million barrels per day is needed.
Wait, 1.5 million barrels a day? Okay. That seems like a pretty extreme cut, especially when it comes to, like, as we mentioned, Angola and Nigeria that are concerned about these baseline levels.
Indeed. But I think it's clear now from the market participants, that a looming surplus in the market is coming. So there is a need to act from OPEC if they want to sustain the oil price. There's been upside revisions on supply. We've also seen, thankfully, the Israeli-Hamas situation improving. So the geopolitical risk premium that we saw a few weeks ago, has essentially evaporated. So that means that if OPEC Plus wants to keep prices at an elevated level, around $85 per barrel, then they really need to act now.
You know, you kind of hit on something I wanted to ask you about. Speaking of upward revisions, we saw the U.S. GDP number revised to the upside. What kind of things do the OPEC Plus ministers, what do they weigh? Do they look at numbers like that when it comes to production cuts or other macro factors going on?
I think that the two things that they look at is essentially the demand and the supply. On the demand, what they really want to look is how resilient the global economy would be to higher oil prices. And if you look at the strong growth levels in the U.S. and in China, I think they might think that a global economy could easily swallow an oil price of around $90 per barrel. That wouldn't really derail economic recovery. And on the supply side, they obviously see what is happening on the U.S., how much U.S. shale production could grow if there's a higher oil price environment, and also surprises around Venezuela, for example, lifting of sanctions. I think those are the two elements where they're keeping an eye on.
All right. So again, you believe a 1.5 million barrels a day cut is needed to support prices, but what do you think is actually going to happen, and how do you think investors should view that?
This is a tricky question. I mean, the meeting is starting in 4 hours. We haven't heard anything, which is a bit worrying. I am confident that the group will finally agree on a cut. I think it's in everybody's interest of the 23 member countries to reduce production to sustain oil prices. I think they will definitely reach an agreement. Now, I'm confident about that, but I'm a little bit less confident than a few hours ago because time is running out. So let's just wait and see what happens, I think.